Okay, so what kind of situation do we currently have on AUD CAD? Now, from the monthly time frame, we know that the market has created this W formation. And after a W formation, what do you expect? You expect the market to make a move to the downside and to go and test the structure, which is basically the neckline of the formation, the previous resistance, which is now turned support at this area. So we definitely want to see the market from the monthly time frame make the move to the downside to go and test the level. Also, what we know is that the market is currently inside of a pretty strong supply area. In fact, before starting this move to the downside, the market created one green candle, which is this one here, establishing this supply area that we expect the market to reject. If we go down on the on the weekly time frame, what kind of situation we have? Now, on the weekly, we can see that the market clearly has respected the area, and in all of this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, which is the level that you expect the market to go and test, possibly creating this information and then rejecting its zone to the upside, but that is something that we will speak about later on. What we can also see is that the market, after this impulse, created a minor retracement and then is now trying to go again to the upside. If we go down on the daily time frame, what kind of situation do we currently have on the daily? Now, on the daily, we clearly have a market that is at a very strong resistance area from a daily perspective. The area was resistance here, again resistance here, again resistance here, and resistance here. So this is an extremely strong resistance zone from a daily perspective, which the market has been rejecting multiple times. So many retail traders are definitely looking at this area for a potential short. And if the market will break this area, everybody will start to long because this will be the break of a very significant resistance level. So that is where the trap might be, okay? Because market makers very often create these very important structure levels, then create a fake breakout above it. Everybody starts to long. At that point, they use their liquidity to actually short, and at that point, the real move to the downside starts. Considering that from higher time frames, that is exactly what we want to see. We want to see continuation to the downside. So how we will be approaching this with students? First of all, let's go and see what we have from an AUD and a CAD perspective if we check the COT data, so the commitment of traders, what big banks and institutions are currently doing in the market. Now, if we check the data, what we can see is that currently we are sitting at minus 4K net positions. So a big increase from minus 54K all the way up to minus 4K, with 35K longs at the moment and 40K shorts and a 43% short exposure. So definitely AUD has been getting stronger. If we go and see what we have from a CAD perspective, what we can see is that overall we had a strong decrease in the strength of the CAD from a positive net positioning to a negative net positioning with more shorts than longs, 58K shorts and 23K longs. And then in the short term, we have seen an increase in the net positions with thousands of shorts getting closed over and over again. Minus 2K, 2K, minus 5K, minus 1.9, minus 1.4. So thousands of shorts getting closed, which obviously makes CAD strong. However, we haven't seen longing yet, proper longs getting added yet, which might be the right occasion here if we see the fake breakout. So if we will see AUD CAD make the move to the upside, break back above the level, we won't be looking for the long. We will be waiting to see the market break below the area, back below, so confirming the fake breakout. Will this happen? That is something that we cannot know, but trading is reactive, not predictive. So if we will see this fake move, only if, and after we will see the confirmed close back below the resistance, at that point, what will happen is that the market will go to retest the level. That is what happens 95% of the time. And at that point, that is where we will have the best probabilities and best risk to reward, which make this pair very interesting at that point. And what we will be doing with students is monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short for the completion of the monthly W formation and a huge risk to reward to the downside. But first, we need to see the fake breakout because otherwise we have better probability setups on other pairs. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.